Okay, so in this section, we will need to put some advanced settings, advanced details. So we will just get a look at that. So to get to advanced settings, how you would do it, just hit on accounting and then click advanced. Previously, when we went to Nebo and then hit settings, we would get all the basic information. So it's the advanced things that you need to look at. So first we will go to the financial settings, and you can change the financial year end. Mostly, in Australia it's 30th of June. For some countries it's 31st of December. For some it's September in the Middle East. I'm not sure about the US. So this is how if you want, you can just hit that and change the dates and save. So it's when you initially say that you are from Australia, most of the things are set up for Australia. And then we've got a requirement saying that goods and services tax, that's called GST. So if you earn more than $75,000, you are required to register for GST. Every sale you make, you need to make 10%, you need to pay GST 10% to the government for the ATO, and also any purchases that you make, the 10% of that can be claimed against the GST on income. In case if the GST on expenses is much higher, the government would pay you that amount to you. For example, if the GST on income is 1,000, how much is the sales? The sales should be 11,000. So if this total gross is 11,000, 10% of that is $1,000. So the net GST is 10,000. Adding another GST 10% on that 10,000 is 11,000. So that's how the total computes. I hope it makes sense. So the sale amount is 10,000 and GST percentage is 10%. So 10% of 10,000 is 1,000. So you add 10,000 plus the GST is 11,000. So that's your total invoice figure. That's the gross. So that's the GST on income. At the same time, GST on expenses, if you pay 500, you have a payment of 5,500 to make. So the net bill amount is $5,000. 10% of that 5,000 is 500. Total is 5,500. Now coming back to our GST calculation, we've got GST on income 1,000 and then GST on expenses 500. So that difference there is the income GST is much higher that you have made, and you have charged that extra $1,000 from the customer. You need to pay that amount of money to the ATO, but you also made payments to others where it contained GST. You paid GST for others and they need to pay to the government. So it's a reciprocal work. So you work for your business and they work for their business. And then the difference $1,000, the difference 1,000 minus $500 is 500. That $500 every quarter or every month or every year, how you want to set that up, you would make that amount of money to the ATO. So you need to report how much you made and all of that, and then decide the GST on that particular quarter. And at the same time, if the GST on expenses is $2,000 and GST on income is 1,000, when you lodge the GST return through ATO portal, or you can lodge it through Xero as well, because it has that feature now. And then the government would give you the difference. They will pay $1,000 to your bank account. So that's about the GST component. I hope it makes sense. So GST can be reported two ways: accrual basis or cash basis. So cash basis, it's pretty obvious. So whenever you receive money and you make payment, you would calculate the GST on that. Accruals is based on the invoices and all the bills. So you raise an invoice, you sold the goods. This goods has gone out from your business, but you didn't receive cash, but you would pay GST on that sale on that accrual basis. So mostly accounting is accrual basis. So you can decide how you want to pay GST on accounting. I would prefer cash. Sometimes you don't get money, but you have sold, but why would you need to pay GST on that? So it's better to stick to cash. And then Australia got TFN, tax file number. You would need to put those details. This is the calculation, how you want to report quarterly, monthly, or annually. And then pay as you go with held period. So this is when we do touch base a little bit on payroll. I'll let you know what this is. For this references, pay as you go withheld means in Australia, when you pay someone, you need to make sure that there is tax in it. So if you are an employee, you get paid $2,000 every fortnight, but that's the net amount. But your actual in fortnightly pay run would have $3,000 as your gross, and they are deducting $1,000 as your tax, and then they will give you net $2,000. And that $1,000 what they deduct, they need to make that payment to the ATO. So that's what the pay as you go withheld means. Mostly when certain businesses, when they have more than 10-20 employees, it's always best to go with monthly because they'll have a huge amount to pay. So monthly is good. If you go by quarterly, $20,000-$30,000 will just go lump sum. So that just hurts a lot of business owners. So you would need to know what that pay as you go withheld withholding is. So I have another course. I explain you entirely based on payroll, how to process pay runs. If you want to become a finance officer, or you are a business owner who has employees and want to process pay runs and keep yourself compliant to the ATO and all of that, I would advise you just go and watch that again in a very simplified way. And that's about monthly, how you set this up. So the Xero system does everything for you. And this is another thing that comes along as pay as you go income tax. These are all related to Australian base. I'm not sure about the other countries. So here you need to, let's say, okay, I'm going to explain you. I'm spending some time here so that you understand what that is, because when you learn from here, it's not explained. So pay as you go income tax, what that means is, these are all installments. So let's say in 2024 financial year, I ended up paying to the government $20,000 as tax for my income. So that's my income tax. So how the government Australian tax office work, so they would assume, okay, they don't want you to pay $20,000 upfront, and because that hurts a lot of businesses. So what they decide is, okay, last year in 2024 June, you had $20,000 of tax payable. Okay, so we would assume in 2025 you would pay the same amount. So they would say, okay, we'll break it down that to 4 quarters, and then you make payments as an installment for your future tax. So if it's 20,000, so every quarter they need to make a payment of $5,000 along with the GST and the pay as you go withholding. So this is monthly, and then of course every quarter, monthly comes in every quarter as well. So these are all needs to be reported and paid to the Australian tax office. So that's how the quarterly thing comes here. And then there's another way it can be calculated as income tax rates. This is also the ATO sets up an income tax rate for that entity depending on the last year's tax, and then that will be multiplied with your income that you're currently earning. So that's how this calculation comes into picture. And then this is all the tax defaults, no need to worry about it. And you just have an eye out for the lock-in dates. So this is important. So when you're working on a certain task, you don't want any other users to make any changes. So you lock in that particular date. And then let's say this is 2008. And then you're working on all the transactions that happen within that financial year 2008, and then no one can make changes to that because you're already working on it. So whatever that happens after, people can change it. So this one you can decide any date when you want to lock in and start working. So that's about the lock-in dates, and then you can set up the time zones and hit save. So that's about the financial settings. And then I'm gonna touch base a little bit on the tax rates. So you would need to set up what the tax rates are. So you don't need to worry about anything else. For Australia, and I think for other countries also it's pretty much the same. Don't worry about any of these imports and all of that. You always need to look at GST on expenses and GST on income. For Australia it's 10%. For some countries the rates are different, so you need to adjust this accordingly. So let's say I'm just gonna go GST on income. You can just change the GST component, but I think it's set up, it's default, so you can't change it. You can just change the wordings how you like it, and if you want you can create a new one as well, but I don't think you would need. So that's the GST free expenses and GST on income and GST on expenses. I'll show you this when we do the matching the coding, the bank coding I was showing you in the dashboard learning. A brief summary is you are paying someone. It's the same scenario I explained earlier. For GST on income, for $10,000 you have $1,000 of GST, and then total figure is 11,000. Okay, now when you raise the invoice, it's 11,000 gross, 1,000 as GST payable, and then the remaining needs to be cash paid. So how the journals would work is, when you send that invoice, it'll show as 11,000 is the gross payment and $1,000 as a GST, and the net amount is 10,000. So ideally the customer needs to pay you 11,000. So that 11,000, the whole amount, on your profit and loss you do not include GST in it, so it's always net figures. On your profit and loss the sales would say as 10,000, and in your balance sheet, because you have not paid the GST to the ATO yet, it will show as a GST payable $1,000. So that's how you would know that $1,000 is payable. And then if the customer hasn't made that payment yet, it'll that $10,000 remaining amount will just sit in 11,000. That $11,000 will just sit in accounts receivable. So this is how it will look like, the journals. So GST on income credit 1,000, GST on so sales, it'll say 10,000, and then because it's an invoice you're sending out, the system will post this journal, and accounts receivables or debtors will have a debit of 11,000, because that's the accounting rule. So debits and credits has to be same. And then once the debtor make payments, so you would say any bank you select will be debited, the bank account will increase, and then accounts receivables, don't mind that, will get credited, so that account gets closed. So this one here still sits GST on income. Okay, so this is ideally a payable, will go to your balance sheet, so that's where the system will post it. So you'd say a payable. So you need to clear that off as well. So at the end of the month or at the end of the quarter or annually, when your GST reportings are happening, you would calculate that how much GST you need to make payment for, and then you would close that GST payable, debit 1,000, so the GST is gone, and then the bank account that you select will get credited $1,000, and then from the bank you made that payment to the government, that's gone, and then there is no GST payable because this one and this gets sets off. So these are the journals that the system will be posting. If you want, you can just take a screenshot, which will help you at a later stage. Okay, so that's about the GST, because these are certain areas I really wanted to stress and teach you, because you need to know that. If you don't know, it's gonna complicate at a later stage. So it's easy, but if you know the concept, so you say GST on expenses, any expenses, certain things, if you allocate, you say GST on it, that'll just calculate and make sure it'll put through to payable or input tax credits. Another scenario I wanted to show you so it makes more sense. You come to the dashboard, reconcile It's 26 items. Okay, so we'll go with so banks. So generally banks, there is no GST in it, so we would allocate as GST free expense. Okay, so this one, in this bill there is no such thing called GST, because when you raise the bill you say that okay, there is a GST in it, or when you receive the bill there it will say GST in it, so it'll allocate correctly. For this one that has not generated, so what you've received an amount of money, 2000. So on this 2000 you have received, you would say there was GST on it, and you say if it's a receivable, so we will say GST on income. Let's assume that this is a sale for your business, so there is GST on income. If somebody is transferring you money or the owner puts money in, there is no GST, so it should be GST BAS excluded. So that's how it will appear. So if you go on to that banking transaction I was looking at earlier, it said there is no tax in it, so yeah, so GST free expenses or BAS excluded, still the same thing, because the rate is always 0. So GST free, all the free, BAS excluded, all zeros, so it doesn't calculate GST on that. So any transactions you can decide if it has GST in it or not, and then it'll just post the transactions as I showed you earlier in the diagram here in the explanation. Okay, so you would ideally need to know what those rates are, and you can play around it. And a little bit on the tracking categories, you don't need to know much about it as of now. Some businesses they do have, it's very rare, so I'm just going to touch base on this. So what this tracking category means is, taking an example as a retail store, they've got multiple branches, multiple places, so you wanted to make sure, okay, this particular store at this branch, I wanted to see the profit and loss, how much they are making. So each time you come here and allocate certain transactions, you would come here and select the region, which region that belongs to. So so when you actually generate profit and loss and balance sheet, you can just selectively select for that particular region, and then have an understanding what's happening in that particular region. So that's about tracking categories. Okay, so I've touched base on financial settings and tax rates and tracking categories. Coming back to your Xero certification learning, so these are some of the areas that we spoke about. Financial settings, these things, changing the financial year and things like that, accrual basis. And then this is again your setting up the tax file number and things. And again, regarding BASes, there's two ways that BASes can be reported. So this option was not there for us, so I couldn't show you. So here, so there's simpler BAS, full BAS. You can lodge BASes through Xero, so that's why this feature is there. So you say quarterly, what basis is it, if there is withholding period for employee taxes, and the income tax I was talking about as the installment that you are paying for future. So you would put all of this. So simpler BAS will only include the gross sales, and then GST on sales and GST on expense. That's it. And then the employee stuff, that's separate. And then full BAS, it includes gross sales, GST on income, GST on expenses, and total purchases, and then the capital purchases, and it includes a lot of information. So with what I have worked on as a public practice accountant, most of them are simpler BAS. There are some old clients use full BAS, and then when it comes to me, I make sure I change it to simpler BAS, which makes life a lot easier. And then save and continue, and then the lock-in dates I was talking about here, how to set that up, and then the tax rates if you want to make certain changes, and then the tracking categories for certain regions. And then yep, you'll be able to answer these questions and then move on to your next learning. So on the next, we would talk about adjusting chart of accounts. So this is very interesting. If you set up the chart of accounts properly, it helps you so much, so you know where to allocate what. So these are all the chart of accounts that if you set up correctly, you can allocate all the transactions when you do the coding. All right, I'll see you on the next one.